All right, so let's get started on the loonie. That's going to be the dollar Canada. And we'll start on the daily chart really to get a lay of the land and see what price is doing overall. Now, before we get started, you're going to notice some little things on my chart. It's going to little blue things that say IB, little yellow things that say NRI. That stands for inside bars and narrow range inside bars. Don't worry about it for today's video. I don't think we're going to talk about anything that has to do with that. It's just something that we've been discussing in our live room the past week or so. So I want to keep an eye on it, and this just makes it easier for me to do so. But if you look at where dollar Canada is trading at, right, we're trading at a previous level of structure, right? We've just about nipped, right, for our little spike here. We've just about nipped our lower level of structure down here, right at and right below the $1.30 even handle. And we've followed it up with really a higher high, higher close yesterday. And then we've currently given back a lot of those gains today. Now, we want to keep that in perspective because we always want to have an idea of where price is trading at, and really allowed us to make a prediction of what do we think price is going to do next, right? Are we likely to continue lower? Are we maybe going to see a reversal? If we can get a clearer picture of what we predict is going to happen on the higher time frame, it really focuses, or really allows us to focus and lock in on a single side of the market when we go down to the lower time frame. And that's the process that, if you've been a follower of this video for any time now, or if you've gone through any of our training courses or anything like that, is what we call IPDE. Now, as we go down to our 4-hour time frame, right, you can see our VS1 level up here. That's going to be our visual structure indicator. In this chance, or this case, is going to be support, right? Green box support, red box is going to be resistance. You're going to see that we have a nice little complex pullback that completed here, right? Boop, and copy and paste this line. Boop, and now we're working our way back down. You also may notice that this nice little kind of formation, right, of a move up, a move down, a move back up, an extension back down, is going to set up a potential cipher pattern, right? That's going to be one of the advanced pattern formations that we trade, and that's going to look like this. So that first AB equals CD, if I can just grab the low here, the AB of that move is going to be our X to A. That first retracement, right, our A to B. Our move up higher is going to be our C leg. And if we can make our way down right above that structure level to about 130.30, I'll make it easy to remember, we're going to have a bullish cipher pattern, which is a buying opportunity where we would expect the market to reverse anywhere between our decompletion right here and our structure lows right there. Now, why we want to talk about the higher time frame analysis as well is because there's different ways to play this. Obviously, if you are a pattern trader who trades it as just a strategy, you can just use this and trade it in its own right. Take target ones, take target twos, however you get down. However, if you are someone who is seeing this as an opportunity to get involved in what may be a bigger reversal, this could be used as an entry reason for that bigger reversal pattern. And of course, you can capture the best of both worlds, maybe by taking a multiple target position, taking a half position off at a pattern target, and then letting the second half position ride for the bigger move. So definitely keep this cipher on the radar as we head into the week ahead. Now, if we go down to a lower time frame, and this may be too late, we haven't quite closed yet on Friday, about 30 minutes to, so I don't, we're going to see a little bit of movement before the close, but nothing too significant. You're going to see that we also have another pattern formation that is formed here as well, and this is going to be a Gartley pattern, right? This is going to look something like this. I'll just kind of shortcut it and get to the point here, get to the decompletion. We're going to look something like this. We're going to have an X to A, swing high or swing low to swing high, A to B, right down here, B to C, and then our CD completion was right down here at 130.55. So depending on how this week closes, depending on how Sunday opens, you may have another pattern trading opportunity here as well, right? You may have a bullish Gartley at market, or if you're someone that maybe uses a more conservative reason for entry, or maybe you use the CTS score, which is the combined technical scoring system, right? Maybe you look at this decompletion, you look for a conservative reason, a double bottom at structure, and then you go ahead and add up your CTS score where you have minor structure looking left, you have a double bottom, RSI over sold, RSI divergence, most likely, advanced pattern formation, and you go ahead and quantify your trade by building that score and seeing if you have the minimum requirements, which you should. You'll have a pretty high score, the minimum requirements to meet your entry. So 2 opportunities here. I would say this, depending on what your stop loss is, your stop loss for this Gartley pattern is probably going to be a little bit past your Cipher completion point, right? If we just measure it out right now, we're looking at, if I remember where I had mine's at, right above about 13s, right above the even handle right up here somewhere. So this is going to be a scenario where you can only take one or the other in most cases. And we get this a lot with trading, specifically in pattern trading, when you have multiple pattern formations that overlap. And you know what most first timers do is they shoot me an email and say, Akil, I don't know, what do I do? And this is a good example of how rules need to evolve over time. We always talk about rules-based trading, where we're trading based on very specific rules of engagement and if-then syntax, or if price does this, then I do this, where it's very robotic, it's very mechanical, it's very black and white. But what you'll discover as you get into your trading journey, especially if you're going to be trading different types of things, whether it's different pattern formations, whether it's different time frames, whether it's counter trend and trend continuation, you're going to have instances where you have contradicting signals, or signals where you can only do one. And those aren't negative times. Those are just opportunities to see what flaws, not flaws, it's a bad word, what holes you have in your rule, and then patch it up. So if you don't currently have a rule on how to handle the situation, that tells me that, hey, that's something that is missing from your trading plan. Take this time to develop that rule that gives you a clear guideline on, do I take the smaller one? Do I take the bigger one? Do I take the Gartley? Do I take the Cipher? Do I take both? Right? And then when this type of situation happens in the future, and it will, now you have a way to handle it without question. And that's just the evolution of a trader. And that goes for however you're trading. And this is just the example for today. But it's a great example of how trading is a forever evolving process where you're continuously trying to get better with your craft. So dollar Canada, 2 potential pattern formations, bigger Cipher, smaller Gartley at market if this thing doesn't run off by the time you guys get to see this video. Let's move on to our next pair, which should be the Aussie dollar. Aussie dollar is interesting. This is, and I always say every pair is interesting because, of course, I picked out the interesting pairs to share with you guys. I do the same internal dialogue, if you can imagine, when I do my top-down analysis. So as I look at my charts for myself personally, I'm actually talking to myself. And most of the time it's like, no interest, I don't care. So when I say, oh, this looks interesting, it means it's a pair that I want to pay attention to. And obviously these are the ones that I give you. But Aussie dollar, right? So we've done a few things here. And again, we started a daily, and once again, let's zoom out and get a lay of the land and see where we're at, right? First of all, we are not in no man's land, right? If you're looking at this just by itself in this zoomed out view, you're like, Akil, trend continuation, trend continuation, trend continuation. There's nothing here. We just broke structure. Buy it, buy it, buy it, buy it, buy it. Nice pin bar to end the week. Buy it, right? But then you zoom in a little bit, or zoom out a little bit, and you see that if I just put a horizontal line right here at this level, we actually haven't broken a previous level of structure right here. So you may want to hold your horses a little bit on a trend continuation trade. Again, depends on the type of trader you are. If you're a full-blown trend follower, you bank on levels of structure being broken and violated. I'm not personally a trend following type of trader. I do take trend continuation trades, but I'm much more aware of structure as far as the role that it plays in my trading. So I'm not interested in any type of continuation here. Although I do think we can have a nice buying opportunity, because although we haven't broken this level of structure right here, we have broken this previous level of structure. We have come back to retest it. This is a very nice candle. Again, I don't know if the week's going to end this way. I can assume that we're not going to see that much movement, more movement in the last 20 minutes. But this is a very nice candle to end the week. And this is 2/3 of our 3-bar reversal, which is a very bullish signal. If we go down to a lower time frame, however, and kind of look at another view of this, right? We have this on the 4-hour, but let's sneak down to the 60 from more of an intraday perspective. If you're looking at taking a more conservative approach, maybe you're not looking for a higher high, higher close, or a 3-bar reversal, you want something more conservative, if we look down here on the 60-minute, you're going to see that we have a potential head and shoulders forming, right? Our left shoulder being right here with this last retracement, nice little complex pullback in here as well. And a bunch of you guys are new and you're studying this. So here's a good example of it, followed by the extension down. By the way, also, this was a very nice move earlier in the week. I believe Jason Greystone shared this. I know we talked about it during the week. I think he shared this on trading, or a video of this on YouTube as well, this rising channel, which is typically you get a sign of relief, and boom, did we ever. But anyway, back to the head and shoulders. We have now moved up to our neckline. Let's just see, because this is actually important. It looks like we broke in and closed above this. We may be in tune for a Cody special for you guys that are frequent of the YouTube channel. And of course, you guys that are on the platform and in the live room, you know all about this. But we actually have a higher high, higher close as we retest the shoulder line, which is going to set us up for, it's going to allow us to do something different, obviously, if this is in your rules. So what you would be looking for first and foremost with a head and shoulders pattern is for price action to come back, create a right shoulder, and then eventually break this level right here, this neckline, whether you have it horizontal like that or whether you have it slanted. Slanted is going to give you a slightly higher entry, but they're not too far off, right? And that would validate the head and shoulders pattern. Because we have this higher high, higher close, this is something that some of our traders use to tell them that, hey, I can do a more aggressive entry. So if price action were to retrace, this sets up for a better opportunity at a right shoulder buy, because now this is a pullback after a trend rotation instead of waiting for that higher high, higher close here. And that just gives you an earlier entry and obviously a better entry from a risk perspective and a reward perspective into this potential trade. So you can look at this in its own right on the 60-minute chart. You can combine this with your analysis from the daily and look for a retest of the highs, but something you certainly want to keep your eye on for the week ahead. Next, let's head over to the Canada yen. I was going to look at Euro dollar and Euro New Zealand, but they're opportunities. They're not great. So we'll talk about it throughout the week if they're still present on Tuesday when we get in the live room. But I want to keep it short and sweet for these trading edge videos, mainly because it makes my life easier. But Canada yen, let's go to the daily, of course, right? You see, we looked at this last week for a potential cipher. Did not happen. But we do have something else that is occurring. Now, once again, we want to put an emphasis on higher time frame analysis and pointing out our higher level of structure. Look left, structure leaves clues. This is going to be an important level right under 82s, right? Structure acts like a magnet in two ways. And in one sense, price is kind of pulled towards it, right? If you have the opposite magnet deals, I don't know the fancy words. I went to a Philadelphia public school my entire life, or for most of my life, so we didn't learn this type of stuff, but you're pulled towards it if they're facing opposite directions. At the same time, if you would flip one around and you have what, positive on positive, they're going to push each other back, right? So, and that's how I envision structure. Price wants to go towards it like a magnet being pulled. Price wants to bounce off of it or bounce past it like a magnet propelling it away. So this is a key level, and you'll see why this is going to come in handy in a little bit. We go down to the 240 chart, right? We have two things happening. One, we do have a series of higher lows, which I like as far as projecting a bearish breakout. We don't quite have, or bullish breakout, excuse me. We don't quite have an ascending triangle, which is one of my favorite patterns because we do have the highs getting lower, so it's not, it's a reach, it's a force, and I don't want to get into doing that. When in doubt, stay out. But what we do have is an advanced pattern formation. And this is one that you don't hear me talk about often. It's the butterfly pattern. And I like the butterfly pattern. I just don't trade the butterfly pattern because it doesn't mesh with my philosophy. And that's a good example of, hey, you can like stuff in the market, but you don't have to trade it, right? When I did trade it, I had very specific rules of what I needed in order for it to be a tradable one. And what happened was that the frequency was so low. I'm talking like less than a handful of opportunities a year. That's less than 5 opportunities a year. That it just wasn't worth having in my portfolio. And I'd rather focus my energy on things that occur more frequent. But we do have a butterfly pattern here. And there's many different ways to trade the butterfly. It's a tricky pattern because depending on who you ask and really your personal preferences, you may trade it differently. Let's just say there's a very wide range within the decompletion, which, you know, if you're trading it, you got to dig into it. But if you notice here, right, if you're using, let's say, a 127 inversion from your A back to your X, we're going to have a butterfly pattern where the decompletion completes right above those structure highs, right? You can see my purple box. I'll delete that. You can see the red VS1 level as well. Again, that's going to give us our daily resistance zone. And if you're front running this on a 4-hour, that means your entry is going to be a little bit before that level. So let's just see. I front run by 5 personally on the 4-hour. So if we're at 81.93, then we're looking at 81.88, which is going to put me right below that level. And what's important about this is, one, my entry is going to be right at a previous level of structure, but that also allows me to put in a solid stop loss, right? See, the thing is, the problem with the butterfly pattern, and you'll see other patterns like this, sharks and crabs that complete above the X leg, is that they're typically completing in no man's land, right? How do we put a stop loss? All of my stop losses on everything else I place is based on structure, right? Structure is that protection, it's that magnet, right? I want to have my stop loss beyond it because that's an area that tells me I'm wrong. If we look at a scenario like this where we don't have any structure, is my stop loss safe here, right? It's, for me, it doesn't work just because my philosophy is so heavily structured around structure, no pun intended. In this situation, because you do have a level of structure looking left, that does give you a solid level that you can put a stop loss above and feel confident if you're a structured trader. So it works well with this specific butterfly formation, which is why I want to bring it to you. And just to kind of dig in the short version of the philosophy of a butterfly pattern and why I like it is because it's a relief pattern, right? With Gartleys and Cyphers and Bats, they're all completing within this X leg. A butterfly pattern completes without beyond it, right? Outside of it. So if this is going to be a very important decision point and price action breaks this level, we're typically going to see some type of breakout, right? We're seeing resistance being broken. We're seeing buy orders flood into the market. We're seeing sellers who realize they're wrong. Their buy orders to get out of the trade is also flooding into the market, right? So we see a lot of buying pressure in the market, much more than the selling pressure, right? The rate of which I should say is much more than the selling pressure. And those are the basics behind how a market moves, right? If you guys didn't know that, that's how it works, right? The buyers are interested, sellers are trying to get out, and they're buyers because they want to escape. So boom, buyers on both sides. Eventually, those buyers are going to find the area where they say, yeah, you know what, good move, let's take some money out of the market. And typically those areas are going to be at levels of structure, right? Where they don't want to, they want to bank something. They don't want to risk everything and try to shoot for beyond that level with their entire position, because if it reverses that structure where they expect selling pressure to hold at, they're going to lose some money. So they're saying, hey, you know what, this is a good area to get out. Let's exit my position, or let's exit partial of my position. So those traders that were buying here, right? What do they become? Well, they become sellers, right? If they're buying and they want to take profit, they want to exit their buying position, they need to sell. Who else is interested at this level? Well, you probably have a group of traders saying, hey, all-time highs, Akil, blah, 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 let's sell, right? So it's a good area of relief from that expansion. And that relief causes a little bit of pullback, which as an advanced pattern formation trader, this is what you need, or a counter trader, you're just looking for a little bit of a pullback, not the entire reversal, just a little bit of a pullback. Now, I would encourage you, if you're going to trade the butterfly pattern, like the most safest place to trade it at is look for a retest of the highs, but of course your testing will tell you that. I would also say this, and again, I hope I didn't confuse the newer traders too much. I try to keep the content on this channel as simple as possible. This can also be a very tricky level for stops as well, because smart money knows that people's stop losses are right above this level. That's why we always want to give ourselves somewhat of a cushion with stop losses and not put it a pip above the structure level. Give it a little breathing room, because we've probably all seen scenarios like this. And actually, if we just look back to this scenario, we've all seen scenarios like this where you get these wicks up here, taking those orders, and then the market reverses, right? You don't want to be the trader that gets caught up in here. So that's why you got to use smart stops. Don't be cheap, be smart. So anyway, bearish butterfly here on Canada yen, long-winded and confusing way of analyzing this potential selling opportunity up at 81.90s. Now, last thing I want to talk about is going to be, let's go over to the S&P here. And we got a nice little retracement on the day, right? I had a lot of people talking about it's been a heavy 2 weeks of news, and today was a non-farm payroll. I paid zero attention to it as I had no interest in the market, but apparently there was some movement this morning. I'm assuming it was non-farm payrolls. I haven't kind of looked at things yet. And we're seeing spikes in wicks like this. Well, this can be two things for you. This can be scary, or this can be a nice pullback. I look at this as being a nice pullback in a very heavy bullish market that just took out previous structure highs, right? If we go back to the weekly and just kind of get a bigger look at this thing. Do I need to keep going? Right? Boom. That's where we're at, right? So it's a little bit of relief, right? A little profit taking, a little bit of a retracement here. Could we end up retracing deeper? Sure we can. But the path of least resistance is going to be a continuation higher. So instead of being fearful, I actually look at this as an opportunity. And a lot of this wiki action is actually catching rookie traders off guard. But if we go down to a 4-hour chart, this is going to be a good example. I mentioned earlier we were talking about inside bars. This is a good example of an inside bar, right, guys? If we kind of bracket this out, right, you see this entire bar, this green thing, forms within the previous bar, which is going to be a mother bar. So if you're looking for a more aggressive way to get involved in a trade instead of your traditional higher high, higher close, you can look at this as being an inside bar breakout. I suppose you can do it both ways, right? You can look for, when we talked about bracketing it, and again, I apologize if you weren't in the live room. If you were, just go back to, I think it was Wednesday's recording where we talked about this, and you can review that session. But you can bracket it and look for the breakout either way. But this is an example of how I would use this in a very specific way that falls in line with my underlying analysis, right? I have no interest in getting short here, right? So I wouldn't look for any short opportunities, even if we broke to the downside here below the mother bar, at least aggressive ones this way. I'm only looking for long opportunities. So instead of using this as a break of either direction, right, I'm only looking for a break to the upside. So a break of this mother bar would fill us in our orders. That would send us up. Now you need to be looking for an extension with this type of deal here if you want your risk reward to work out, right? If you enter right here above the highs, you still want to have your stops below this level. Perhaps you'll get an opportunity to trail on a lower time frame, but I don't see a safer place for a stop loss below that level. So if you're only shooting for a retest of the highs, you can see that risk reward is going to be off, and that's not necessarily a position you want to be in. However, if you are shooting for an extension, right, and let's just draw a Fibonacci extension from our most recent swing low to swing high, and we can look at 127 and 1618. 127 being conservative, 1618 being that golden mean, right? You can see that moving up to this level, you're going to get more than a 1-to-1. Of course, moving up to 1618, you're going to get more than a 1-to-1. And as we talked about in the past, this is more of a, you can trade the S&P. I suppose I would look at this as more as a position trade or an investment where you're looking to hold on and establish a position for the long run. So I would certainly be looking to actively manage this on the way up and honestly get as much as you can out of it and try to hold that position, at least a partial position, and then continue to add as we dip. So a little bit on the S&P. So that's it for this week, guys. I hope you guys enjoyed. As always, make sure you check out the Trading Coach podcast. We've had some stellar episodes come out. We're nearing episode 400. So if you are new, you got your work cut out for you, but they're pretty short episodes. I rarely do they go over 20 minutes, so check that out. Also, if you're interested in becoming a member over at Tier 1 Trading, whether it's a premium member or a trial member, just head over to www.tier1trading.com. Check out that 14-day trial. Get on the platform, introduce yourself to our community, meet some traders, hop in some live rooms, take some free content. Really use those 2 weeks as a chance to better yourself as a trader and sponge as much as you can off of a great community of traders. We're fortunate enough to have a few traders get funded over this coronavirus break, I guess you can call it. These are the guys you need to be talking with, picking their minds and saying, hey, how did you go from this 5 years ago to that right now? Because that's who you want to be. And I know Jason Grayson and myself, obviously we're mentors as well. You can use us, but I think it's a little bit different when you can see people that are more closely to the position that you're in versus people like Grayson and myself, who you probably see as being consistently profitable forever, even though we struggled quite badly for a very long time before we got started, before we got going as well. So I'll see you guys on the platform. Until next time, plan your trade your plan. Do remember to like this video. If you have any questions, make sure you leave them in the comment section below. And feel free to share and subscribe if you haven't already. All right, see you guys next week.